Into the core of the chapter, we'll first understand alteration of share capital. Don't skip this video because this lecture is very important. A small video, but it will completely cover your this internal reconstruction chapter as well as amalgamation chapter part, a small part of amalgamation, and as well as the financial statements of the company. This first unit, I told you, it will cover this part also. So don't skip this video, very important. Alteration a little bit of company accounts will you'll come to know over here. As per section 61 of the Companies Act 2013, a limited company can alter the capital clause of the company in the MOA, that is Memorandum of Association, of provided if it is authorized. It is means the alteration of capital clause if it is authorized by its AOA. AOA stands for Association of Articles. We'll come to know MOA and AOA if you have studied law. If you have not studied, please read it. You will understand it. What does MOA and AOA means? Alteration refers to change in authorized or issued capital. So there are following methods, different ways in which share capital can be altered. So firstly, write which are the different ways. Following are the different ways in which share capital can be altered. First is increase in share capital. Very simple, you all know this, increase in share capital. If you all are CPD plus, you know what is increase in share capital. Don't worry, I'll explain it, but I am telling you all know it, but you all are not understanding what does this means. When I'll be teaching this, you will automatically come to know, okay, I know this. Second is consolidation of shares. Third is subdivision of shares. Fourth is conversion of shares into stock. This is quite interesting. Fifth is cancellation of shares, of unissued shares. Okay. So firstly, I want you all to please pause the video and write this much, then we'll go into detail. Very simple. I hope you all have copied this much. So first we'll see increase in share capital. What does this mean? Increase in share capital. The company can increase its share capital by issuing new shares. So you know the entry of issuing new shares. I hope you all have studied this in your CPD. Okay, issuing new shares if it is provided by its article. If it is not provided in the articles can be amended by passing a special resolution. If you want, you can write it what I have said. Just rewind the video, listen it and write it. Okay. So the entry of increase in share capital, that is issue of new shares. Issue of new shares entry is quite simple. Debit bank account, credit equity share application and allotment account, and then again debit equity share application and allotment account, credit equity share capital account. Okay, I prefer never to do this two entry. If it is a 8 marks question, don't do this. Simply consolidate the entry into this bank account, debit credit. You pass normal entry, don't write in your exam debit and credit like this. I am giving you in this manner so that when you revise it, it becomes easy for you all. Debit credit equity share capital account. Whenever you see in capital reduction sum, internal reconstruction sums, such thing is given, new equity have been issued. Okay, new equity have been issued. So simply pass this entry if it is a 8 marks question. If it is a 16 marks question, go for this entry. Okay. So firstly, I want you all to please write this because I have to turn the page and move on to consolidation of shares. I hope you all have copied this much. Now let's move on to consolidation of shares. Second, consolidation of shares. I know this is quite boring theory, but trust me, if you have missed this theory, you have no grip on this chapter. If you have just known to solve the sums and you have skipped this, definitely you will goof up somewhere around in your paper, and that will cause you a huge loss. So better is to listen to this introduction videos of this chapter, because these are the complete base of this chapter and 16 marks are there in this chapters. Okay, this chapters means the 3 chapters that I have marked in the practice manual. Okay, consolidation refers to conversion of shares of smaller denomination into shares of larger denominations. This can be done only if there is a provision in the AOA, that is Articles of Association. If it is not there, you can amend it by passing a special resolution that you will study in your law. So I am not going deep into law. Entry is debit. Please write in this manner only, or else if you want you can write in a normal general manner also, but this is little bit simple for you all. Debit equity share capital account, the existing shares. Okay, the existing shares, the existing number of shares. Okay, credit equity share capital. I'll give an example, don't worry. Equity share capital account, the new ones. That means existing, this was the existing which were of smaller denomination into new one which are converted into larger denomination. The example, take the example ABC Limited having 1 lakh equity shares of rupees 10 each, decided to convert the shares into equity shares of rupees 100 each past the journal entry. That means the smaller denominations are converted into higher denominations. So firstly write the journal entry in a normal manner. Equity share capital account to equity share capital account. Okay, in bracket existing was, what was existing? 1 lakh. This is the question. Okay, 1 lakh into 10, that means 10 lakh in the amount column. And the new one says of 100 each, converted into 100 each. That means the number of shares have been reduced to 10,000. How 10,000? 10 lakh divided by 100 comes to 10,000. Okay, so 10,000 into 100 will again become 10 lakhs. I hope this is quite clear. And then you have to write the journal entry being 10,000 equity shares of rupees 10 each. Just a second. 1 lakh equity shares of rupees 10 each consolidated into 10,000 equity shares of rupees 100 each. I hope quite simple and easy. Please pause the video and copy this consolidation of shares. I hope you all have done.